Hi, everyone. Welcome back to another episode of Ask a Professional. My name is Ryan Abramski. I'm the Director of Business Development for EasyLiving. We're a home care and care management company serving the Tampa Bay area for over 20 years. Each week, we try to do a weekly video series on different professionals in our area and how their services can kind of tie into the services that we provide and how we work back and forth to each other to ensure that our clients, whether it's a service that we provide or not, if we don't provide that service, we have a great contact that makes sure that you are taken care of. So this week, I'm joined by Melamud. He's a Senior Vice President of Investments at the Belleair Private Wealth Management Group of Raymond James. Gene, thank you so much for joining. I appreciate it.
Pleasure to be here.
Thank you. So Gene, first off, tell me a little bit about yourself and your company, Belleair Private Wealth Management Group.
Well, Ryan, I can't believe that 25 years flew by so quickly. I've been with Raymond James for 25 years this January. It seems like it was just yesterday. But then again, my little children who are 15 and 12 seem like they were just born. We sort of mark time with our children. So I realize how fast the time has gone. But 25 years seems like a long time. So yes, I'm proud to say that I've been with Raymond James for 25 years. Have a lot of experience on my hands because during those 25 years, we've gone through a number of very different, very complex market cycles, including the tech wreck of 2000 through 2002, the big declines of 2008. They're referred to as the Great Recession. So what I do is I work with individuals and help them design a financial plan and help them stay on track. To make sure that their money lives at least as long as they do, or preferably longer. Most people want their money to live longer than they do. And then I also work with companies and help them design 401k plans so that hardworking folks are able to put away a few bucks and are able to track that to make sure that they're working towards retirement and have some money in retirement. So I'm privileged to have that information, to be in the role to provide those services, and amazing how fast the time flies when you're having fun.
That's right. I was just going to say that when you're doing something you love, it doesn't even feel like it's work anymore, and the years just fly by. So.
Right. I think it's also important for folks to sort of know who their professionals are, right? Because in today's environment, everybody's trying to get a hold of your identity, of your bank account, and there's always a breach almost weekly or monthly, and it's a pretty major breach. So my acronyms are, I started in the business as a board certified public accountant, so I did some accounting and was disenchanted with the business, and my eventual calling is in the investment business. But prior to getting into the investment business, I got a master's at University of South Florida, and then got a certified financial planning designation, and I'm also a chartered retirement planning specialist. So designations like CPA and CFP, MBA are recognizable to most people, and these designations generally carry ethical standards and continuing education requirements so that, you're current with your knowledge. So that's what continuing education is for. And ethical standards, of course, you have to abide by the rules and regulations of the industry. And if you don't, then it'll be on your record. And so a lot of information is available on the internet today. And so folks can look up their advisors, look up the credentials of their advisors when they're shopping. And I'm very proud of mine.
Absolutely. Well, yeah, sounds like you got all the credentials that people should be looking for there, and making sure that they have for someone that especially they're going to trust with their money. So I know you kind of gave some examples of some services. So, just a real quick snapshot, what are the different type of services that you provide specifically?
So, it varies, right? We, thankfully, I don't have like a standard booklet to give you and say, okay, this is what I'm limited to. Because of the vast experience that I have and the vast resources of the company we're able to custom the relationship to the needs of the client. So whether the client is looking for a total return and wants to be a bit more aggressive with their savings, depending on their goals, whether the client is a senior and is looking to preserve capital and generate some income, we try to help the customer clarify their goals and construct or help them design an investment program around those goals and help them monitor that they're on track, because every market cycle is different. Every correction is different. It's like a snowflake.
Mm-hmm.
So you may use previous market cycles and previous market turbulence as a lesson and design an investment portfolio around it, only to see that the next set of circumstances that bring on the next correction are very different, and the portfolio might not be ready. Our goal is to communicate with customers on a regular basis. Just because a plan is in place and the portfolio design is in place doesn't mean it shouldn't be tweaked.
Yeah.
And so by tweaking, I don't mean going to cash or trying to time the market. I just mean that tweaking the formula a little bit, right? So if over time your allocation changes a bit, if financial companies are doing really well, maybe you should check your allocation and make sure that the amount of exposure that you have to financial companies is reasonable, so that you feel less pain like you did in 2008.
Absolutely.
Maybe if technology is starting to dominate your portfolio and you're making all kinds of money with some very popular stocks in the media that I don't need to mention to you, who the culprits are. But if they're dominating your portfolio, when they start to misbehave, you're going to have a bigger impact on your portfolio, which is a perfect example of what happened between 2000 and 2002. Greed is a very powerful feeling, just like fear, right?
Absolutely.
So folks don't want to be left behind when they're trying to make money, and they chase and they pile into some of the more popular trades that you hear in the news today. Oh, just like when you get together for dinner, I've made so much money with this stock, I've made so much money with this investment. And eventually enough people pile in so that when it's time to go, when circumstances have changed, all these people are trying to run out of a very narrow door, and there's not enough buyers on the other side. It's very hard to squeeze a whole lot of people that are trying to get through a narrow door, right? I'm giving you enough in acronyms because selling pressure is very difficult, right? Because it feels like these great companies, their stocks feel like really bad pieces of used paper, right?
Yeah.
Just people are just throwing them out, which was what happened in 2008. When there were some folks that had the courage to talk about, nationalizing financial system in the United States. I can't even believe I'm telling you this, but I heard those kinds of words in the news, which was very scary, right? In 2000 and through 2002, the Nifty 50, some of those popular stocks that people were piling in, suddenly became less popular, and people wanted to get out, and there wasn't enough buyers on the other side, and the pressure and the pain they felt on the other side as an owner of that security was terrible. So this year is no exception, right? When COVID set in around March, folks got really nervous from top to bottom. In March of this year, Index 500 went down 35%. That's a huge decline, huge destruction of wealth in a very short period of time.
Absolutely.
And if a person reacted, right, if you reacted and you have a quick trigger finger and you sold, thinking, oh, I'll just come back when things are better, you didn't have a chance to come back, because who knew that the market was going to come back since April through now so quickly, right? Index 500 is up right around 3% year to date. So you have to be very careful. My most successful customers really understand what they have. And when they make changes, they make them at the margin. It's like if you're walking, you're going to continue to walk. You're just going to change your pace a bit, and you might walk a little slower or you might walk a little faster. But you don't stop because you cramped, because you never walked, you never sprinted, right? Sprinting might not be in your wheelhouse, but walking is comfortable. So I think that using these kinds of sort of acronyms, that is sort of these examples that are so basic, stay within your comfort zone, Because when you're outside of your comfort zone, you're going to make an emotional decision. If you're
Absolutely.
doing something you don't understand, eventually you're going to become uncomfortable when things are going against you. So don't put yourself in that position. But greed is such a powerful feeling. Fear is such a powerful feeling. Well, I heard my friend do this. I feel like I have, I can make that kind of money too, right? When you hear all these, buy gold commercials, right? They try to scare you out of the market. Buy gold. If you only bought gold, who's the guy that does these commercials? Chuck Woolery. Wasn't he the guy that used to do some kind of a kissing game on television, right? Was some sort of a matching game. So yeah, he goes, yeah, if you only put money into gold and whatever. And yet Warren Buffett, one of the smartest investors in the world, says he doesn't understand gold. It doesn't pay dividends. He doesn't have a financial statement. It's a function of fear. So whatever works for you, if gold works for you, great. Whatever it is that doesn't contribute to your emotion so that you make an emotional decision and get out. My worst fear for customer is the customer getting out.
Sure.
Because if you're out, good luck coming back.
Yep.
If you're slowing down a bit or speeding up a bit, that's much easier to manage.
Yeah,
so
sure.
I'm kind of getting away from the track. Am I getting away from the track? This is probably, is this where you
No,
wanted
it's
to
fine.
go?
Like I said, it kind of segued into my next couple of questions, how do you economies prepare for a down economy, and what do you think's in store for the next year? But I mean, you kind of touched base on that already, that it's just
you have to
not panicking.
let me well, not panicking, but you have to prepare for a down market all the time. My
Sure.
customers work with me because I'm a nervous person, and I think of a bad scenario right away, right? So when you construct an investment program, you think of what can go wrong right away. When you buy into a stock, as great as a company it may be, who can penetrate their business? Who can interfere with their product cycle? What can go wrong? If you're not thinking of these things, please don't invest.
Yeah.
So if you understand what you own and sort of your comfort zone within which you're not going to get a cramp and get out of the race, then around that we can talk about, right? Because you can measure yourself against comparable indexes, right? Because you have some stocks, some bonds, some cash, and you can pull passive indexes to see, well, how am I doing relative to those indexes?
Sure.
So if the index is up 3% and you're down 10, maybe something's wrong. Maybe I should talk to my advisor. If the index is up 3% and you're up 10, that's not because your advisor is brilliant. It's because you're taking risks to get to that level. I have some customers whose portfolios are up significantly, but I tell them, look, you're up significantly because obviously you have a concentration in technology. You need to start taking it down now. Taking it down when no one is thinking about it, when people are greedy and they're thinking, oh, if I can buy into this company, into this investment and double my money, wouldn't it be grand? So if that's happening and you're lightening up, only to see 3 months later, 6 months later, a year later, at some point it's going to start to go against you. I'm not telling you to sell. I'm just telling you that it's not bad. Nobody ever got hurt taking profits.
Yeah.
So if your comfort zone is defined by certain exposure to tech, certain exposure to industrials, to healthcare companies, and you know how that bounces around passive indexes, then you ought to stick to that strategy. But over time, that strategy constantly changes. Right now, technology stocks are outperforming. Maybe there's going to come a time when they're underperforming. Healthcare stocks are performing really well because folks are trying to guess who's going to come up with the solution to COVID. There's going to come a time when they're not doing so well. So what you do over time is that if I'm comfortable with a certain weighting, then I could make it come true. It's called rebalancing in my business. I could rebalance my portfolio and make my weightings so that reaction to changes in the market is within my comfort zone, so that I'm never in position to strike out or cramp and be out of the race. I always want to be in the race. I'm just either walking moderately faster or moderately slower. I'm never at a standstill or sprinting, because that's for young people who can afford to make a mistake.
So with all that being said, what are what kind of fees does a financial advisor like charge for those types of services that you guys provide?
So in the industry, there's all different folks, right? So some folks are operating strictly fee-based businesses. There's hardly any more commission businesses, traditional commission. And so it's very different. So my business, I would tell you, is a mix. I would say the preponderance of the majority of my customers are fee-based, where there are no transactional charges, and our compensation is a function of the fair market value of the underlying portfolio. And the fee that we charge is a function of how much is under management. The more we have under management, the less is the fee.
Makes sense.
But by the same token, I have the luxury to tell you that, well, gee, if my customer has owned XYZ stock that they bought at $1 a share, and today it's at $100 a share, and the customer is very clear that they're never going to sell the stock, they just want to park it, I'm not going to charge them a fee for it just because it's parked at Raymond James. Mm-hmm. And so if we are, for example, creating a laddered portfolio of bonds for them, and the customer and I are working on creating that laddered portfolio, it's more cost effective for a customer to have a small built-in charge to when they buy it, and not have a recurring charge that eats into their yield. You understand? It eats Absolutely. Into their interest. So I have, as a advisor whose focus is to serve in the best interest of the client, not in the best interest of me, but in the best interest of the client, I have the ability to put together, a traditional fee structure to where there is no recurring fee, to a fee-based structure, as custom to what the customer needs, what they need their money to do, how available they are to authorize a trade, how skilled they are with receiving information. Some customers are really stressed out by a call from me that says, gee, you should do this instead of that, buy this or sell that. And they're like, well, I don't understand all of this deeply. I'd rather not have the stress of making that decision. You do it. And I don't want necessarily to have the discretion to do it. So we'll bring in an institutional money manager who, for a fee, will transact consistently with what they've been hired to do in a way that fits into this customer's financial plan. Do you understand?
Absolutely.
Yeah. So this way, everyone's needs are being met. The customer in most cases wants to know, what's my bottom line, Gene? Am I making money or not? What's not making me money, and is it hurting me? And if it's hurting me, why do I own it? So energy stocks, as an example. Why do I want to own energy stocks? All they're doing is going down right now. Is it possible that after we have a vaccine, we'll travel a little bit more mm-hmm. and use our cars a little bit more, and maybe visit a Disney park, something crazy like that, right? It doesn't seem like a possibility right now, but at some point, oil prices are probably going to go up. Do you have the tolerance to hang in with oil and maybe buy a little bit when it's down north of 30% for the year? Most of the oil indexes. Those are the kinds of things. I mean, all I could tell you is Warren Buffett, who's a pretty smart guy, and you can't ignore really what he's doing, right?
True.
So it was reported on CNBC the other day that he bought almost $1 billion worth of Bank of America in his Berkshire Hathaway portfolio. And Bank of America is down, I don't know, somewhere between 25 to 30% for the year. So I'm not telling you that I'm bullish or bearish Bank of America, but when somebody of Warren's stature puts that kind of money, and most everybody else is interested in, what Amazon is doing or Facebook is doing or whatever, you can't ignore what Mr. Buffett is doing.
Absolutely, absolutely. Well, Gene, I want to thank you for your time and your expert, insight on this, industry, this profession. Obviously, just speaking with you today has just absolutely blown my mind, about your knowledge and understanding of what people are dealing with. And I think, what spoke to me the most was, the reiteration of that you're doing what's best for your client, not for yourself. It's you're doing what's right for them to help with their portfolio. So that's such a good thing to hear, and it's an honest thing to hear, especially when you're handling other people's money. So I just want to say I appreciate that, and I appreciate the time today.
I want to tell you one more thing. Ryan, that's on top of my mind, because I think that if folks were to say, well, what's your differential advantage today, right? Because there's lots of financial advisors, right? There's even robo-advisors, right? You could fill out a questionnaire and have some robot do your stuff. An incredible amount of money poured into robo-advisors because, it's inexpensive, and especially some of the younger folks who are very technology savvy seem to be comfortable with that. I think our differential advantage, my team's differential advantage, is availability. When our customer calls, they don't have to push this button, tell us why they're calling. There's 4 or 5 members on my team. We get to know our customers. We call them on their first name. We know, what's happening in their lives and what their goals are. And it becomes a very different thing. It becomes a very different relationship, right? When you walk into a restaurant that's your favorite restaurant and, they know what you like, it feels good, to have them, give you what you want in a way that you want it, so that you have a really terrific experience.
Absolutely.
So if all we were doing is competing on fees, which we try to do, and I believe we're doing a very good job, I don't think that's enough today. I think today you really have to deliver experience. You have to deliver service. The motto of Raymond James is service first. And service first is sort of is all encompassing. It's not only service first to the customer, but it's service first to the employees that work for the company and make the resources available to them to be the best they can be. It's service first as a member of the community and do the best that you can do for the community where you work. And so when you work in that kind of an environment and you're able to be the best you can be for your customers, I'm very comfortable competing with robo-advisors or anybody else in the business, knowing that, yes, we can deliver, excellent service at a very reasonable fee to try to protect our customers and try to grow their wealth. So that's
Absolutely.
all I have for you today.
Yeah, for sure. And like I said, service is a huge thing nowadays. You hit the nail right on the head with that. So again, Gene, I want to thank you for your time today. I really appreciate it. The audience appreciates your insight. If you or anyone has any questions about Belleair Wealth Management Group, or any questions about the financial industry, please post your comments here in the comment section, or you can always reach out to us at EasyLiving. We'll put you in touch with Gene and his team, and we'll also put Gene's contact information down below so you can get in contact with them directly. So again, thank you, Gene, for joining us today. Thank you, everyone else, for tuning in, and we look forward to seeing everyone next time. Thank you.
Have a great day, Ryan. Take care.
Thank you.